Hello, shiny happy people. Melissa with White Diamond Realty here, and I'm bringing you the Monday Market Minute, my monthly live video showing you exactly what's happening in the market in Monongalia County. Today, I'm going to talk about October of 2020 versus October of 2019. My glasses are crooked. This one gets stuck and it's like almost falling off, so I gotta be really careful. So please don't judge me for my cockeyed glasses. So Monongalia County, 2020 versus 2019 in October. Let's start with single family detached units, shall we? This year in October, we had an increase of units sold of a little over 23% from 60 in 2019 to 74 in 2020. That's a 23% increase, just a little over. Our days on market was also faster. Our days on market went down from 68 in 2019 to 55 in 2020, which is also a little over 23% difference, 23.6% decrease. Our sales price, yet again, has gone up pretty significantly. In 2019, it was $291,588. And in 2020, it was $329,138. That's an increase of almost 13%, 12.9 to be precise. So that is single family detached units. Now, my necklace keeps changing. Don't look at myself very often. Then I go live and I see everything that's wrong with me. So attached units, so townhouses and condos. Another amazing month in general for townhouses. Units in 2019 of October 2019, 22 units sold. This year, 40 units sold. That's an 81.8% increase in units sold for townhouses and condos. Days on market was also better. It dropped significantly from 53 last year to 27 this year. That's almost twice as fast again. It was that way last month too. 96.3% faster. Wowzers, dudes and dudettes, excuse me. Don't want to leave anybody out. Sales price was the only thing that was a little wah, 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 but I'm going to talk about that in a minute. Not really wah, 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 just different. So sales price last year for townhouses in the month of October was $203,506. This year is $184,489. So that is a decrease of about 10%, 10.3 to be precise. Now, I don't necessarily think that's because it's a loss of value in townhouses. I think what that is reflecting is a little bit more of people who would not have been in the market can afford the lesser priced townhouses. So they are going into that, and also some speculation on investors' part. So, the rates are really low, not just for people who are buying for themselves, but also people who are investing. And that kind of lower priced townhouse is a really good investment for people who are already landlords or want to be landlords. So I think that probably has a little bit more to do with the decrease in the townhouse price as opposed to just the values dropping. So don't worry about that too terribly much. Now, I did want to add on a little bit of a discussion in this month's video. I've seen, like questions online as I'm going online, reading, concerns and stuff on both the local and national level. And even a couple people have approached me about the market in 2008 and leading up to 2008, that just huge real estate bubble leading up to 2008, starting right around 2002 or so. And then boop, popping and crashing in 2008 as opposed to now, because we're seeing all of these great drastic increases in numbers, my chicken scratch, of increased sales, increased values. They're going up considerably faster, like values and such, than typical. So I wanted to talk a little bit about the difference between now and then. And I was in that market, so I lived it. I saw what was going on firsthand. It was right when I always pick the right time to get into things. I jumped into the real estate industry right when the boom was happening. And what that was an artificial stimulus of the market because of nefarious deeds being done by very large banks and corporations and investors. So at that point in time, we had these big banks who were doing stated income loans, which meant that you could go to a bank and just tell them how much you made, and they would say, okay, great, thanks for being honest, sign here and give the money. You had appraisers who were so overwhelmed, and the banks were picking and choosing their appraisers, and they would just do what's quote drive-by appraisals or desktop appraisals. And therefore, they weren't going to the houses and seeing them. It was an artificially and intentionally inflated market that was driven by bad deeds in the big old market. And I tell you what, there are two movies I would highly recommend for you if you are interested in that kind of stuff. First of all, first one is a Hollywood movie. It's called The Big Short. It is a really good, based on a true story, representation of what was happening behind the scenes by these big corporations that caused middle America to crash in the real estate industry. It'll make you really, really mad. And then the second one is a documentary. I want to write it down, and that is called Meltdown. Documentary called Meltdown that talks about all of that's happening. Now, that's what was happening then. What's happening now is a natural reaction to what is going on with our economy right now. This is not being inflated by one or two entities that are trying to line their pockets. This is a natural occurrence of what's happening with our economy, with the feds who are keeping the rates very, very low to keep stimulus in our economy to help make up for this financial issues that we're having from a force that we have no control over, with the virus that's coming down that's forcing some industries to shut down. So what we're seeing here is a far more natural, healthy way that is actually being done to stimulate and keep our economy healthy. And the Fed has indicated that they're going to keep the rates very low for at least another year or so in order to control inflation. So this is how big economy works. We are doing this to control inflation, keeping money in our pocket so that we can go out and shop. And then that is why you see this influx of people who are now taking advantage of these low markets and naturally and healthily boosting, not bursting or inflating, but boosting our real estate market. Will this keep going forever? No, it won't keep going forever. We all would like for it to keep going forever, but it's not going to keep going forever. However, it will go steadily. We will probably continue to see these steady numbers, with differences here and there in the months just because of seasonal changes and stuff like that. But in general, we're going to keep this going until we're back on our feet. The feds then feel comfortable to raise the rates again. Therefore, the mortgage market in particular, will react to that, increase a little bit, and things will settle down. Plus, we'll have the outflux of people from the urban areas going into the more rural areas because they don't have to go to the office anymore. That will slow down. So I anticipate, now this is just me, please don't hold me to it. There's no crystal ball behind me, I promise, but this will probably continue at least for another year or so. Slowly but surely steadying down. I don't think it's going to crash because this is an organic reaction to what's going on in the world around us. 2008, not an organic reaction. 2020, organic. And we all know that organic is better for you. So don't worry, my shiny happy people. All will be right with the world. I hope you enjoyed this. I'll share it for posterity. You can share it for me. And that's it. Enjoy this lovely weather and happy Thanksgiving. I probably won't see you before then, at least not live, maybe, I don't know. We'll see, but happy Thanksgiving. Share with your loved ones, even if it's over Zoom. I'm grateful for every single one of you. Take care. Bye.